As a start, perhaps I just do a quick introduction of myself. My name is Chun Hong. I work for Moody's Analytics in the Bureau van Dijk part of the business. I've been a kind of consultant for in the areas of risk, for fraud risk and money laundering across Asia Pacific for the last few years. And it's interesting area to see how typologies of fraud and money laundering has evolved. And today, with our COVID situation, recent oil and gas crisis, it's interesting to see how the typology has really changed. Right. So without further ado, maybe I'll just go into introduction of the session per se. Right. So actually, in terms of fraud today, we said in the COVID situation and the oil and gas crisis, we're seeing that actually now we're not dealing in the fraud areas where it used to be a lot of business takeover, email takeover, business email compromising. It's still there, but we've seen more and more where we have clients that used to have good standing with the banks, good credit standing, that now because of the perfect storm of crisis that's happening, they're struggling a bit in their business, and some of them are actually going under. And a lot of times we've seen some of these good clients, especially the management behind the clients, in order to keep themselves and enrich themselves with the business, they use it as a front now to defraud the banks. And this is especially so now. We've seen various governments trying to help them save the economies, and they're using the banks as a channel to channel some of these funds, right? So a lot of businesses are trying to make use of this opportunity and perhaps enrich themselves. Now, so we're not seeing the usual typology now. Now it has evolved. Now we're seeing good clients resorting to some of these activities to beef up their books, right? And try to defraud their banks, right? To create the illusion that they're credit worthy when sometimes they are not. And it has happened a few times, and we've seen it a big case in Singapore quite recently. Now, so how do we then solve this challenge that we have today, right? When the good clients are turning bad. Now, these are very difficult typology to catch because it's made up of small transactions, right? One of the key issue is that when the client, the bank's client, is doing a transaction or so-called transaction using trade across, with their counterparty or their overseas, banks actually do not see the full information that's available on the counterparty within the trade, right? So you cannot see the whole life cycle. And then, if you don't see who's on the other side, then it's very difficult to decipher what's going on in the entire trade, right? So this raises an issue for then the banks to start looking at detections. So the typology that's evolved right now, we're seeing in trade fraud, right? We're seeing that the companies using various window dressing methods right now, and they're trying to create impression, right? This illusion that they have a very healthy book of business. And how do they do that? They beef it up with a lot of transactions, right? A lot of trade transactions to show that actually I have a healthy book of business, right? I'm credit worthy. I have assets, right? My balance sheet is good. So they try to cover all these weak financials, right? And they use and get credit facilities from the bank. Now, the difference from credit loss is that these clients, perhaps with intent in mind, never intended to pay back what they get from the banks. Right. So, and they may think that, if the business turned the corner, they may try to patch it, right? Or they may try to repay. But most of the time, we're seeing that they have no intent, right? Because once they create the illusion, the hole gets bigger. They have no intent to pay back at all. So they use series of small transactions. They might fake invoices, right? They might fake some of this manifest to create this transaction, and they will lead up to a big one. And typically that's when they get the loan facilities for a big transaction, right? So these are hard to detect because you can't really screen for it. There is no prior money laundering or fraud red flag sometimes, right? And these are clients, sometimes with deep history and with good credit standing. So it's difficult for then risk and compliance to then look at the client, because the front office will say, these are my old 10-year clients, right? There's no reason to doubt. But here, what we are today to share is where are the potential red flags, right? Where you can have then the reason to doubt, to build a case in case that you see there are risks that the bank is facing, where then you can protect yourself. So in this window dressing mechanism, we're seeing what we have is there are a lot of carouseling of goods, right? Where there are no physical transaction. It's all business play, right? And in the whole scheme of things, what you're seeing is I'm selling my physical stock, if I do have some, to a counterparty and actually getting it back directly, right? Creating a loop of impression where there are a lot of transaction in the books of business. Sometimes there are no physical transaction involved at all. It's all just paper play in these statements. Now, another way that they do it is after they do the round tripping of the carouseling of the goods, is to round trip the money and the funds, the same stash of funds across the different banks that they have, making it to look like it's business activity, right? Where there are no such activity at all. Now, this is difficult if the banks that they use do not have information, cross information on each other, right? And they might use various subsidiaries to do this to create that illusion. Let me show you the example of that the red flags in the future, right? So one way you're looking at is then to be able to pull this off, right? The red flags in detection, to be able to pull this off, is there must be another party, right, that is in play, because you cannot pull off a scam by yourself, right? Then who is the other party that is involved in this round tripping and carouseling of that money? Now, it's either a subsidiary, it must be someone they trust and someone they know, right? So it has to be either a subsidiary that they have in a wide array of network where they know that perhaps the bank may not have a full view of their network entities, or they may use shell company that they purchase for that purpose, right? So some of these are the red flags. So now we look at then, are there relationship within the parties of the transaction, right? Is there a firm rationale of the transaction? Is the transaction fit for purpose, right? And then we look at whether is this company that they're dealing with in the counterparty on the other side, is there any doubt that these are real or shell company for this purpose, right? Because if these are counterparties, either they are dormant or have been deregistered. So therefore we say they're not existing right now, right? Because they've been deregistered. Now, are they using all these parties as for the purpose of running the scam? Then of course there are other shell companies that you can now purchase, right, off the shelf just for this purpose as well. So now we look at the various areas where how can we look at what are the red flags that we can do a detection. Now we're looking at then the whole picture. What we want to do now is to be able to have a view of the entire picture and the transaction life cycle. Now this is only possible when you have the access to a wide array of data of your client, right? And the data available to look at the counterparties. Now, why is because we're seeing there are organizations where you have a particular ultimate beneficial owner that has a wide array of network in their subsidiaries entities, right? And with that, if there are linkages of parties that are dealing with each other, right, that are linked in this association of network diagrams, then the question to ask ourselves is, one, is it a red flag? Because is there any business sense for related parties to start dealing with each other within a wider network? Now, this is only possible when you have access to technology and data that allows you to, one, build the whole network entity diagram of your client, as well as a whole network entity diagram of the counterparty, right? So then this is even more difficult because I've seen some of the operations today where, sometimes we do ask clients, how do you get to building the shareholder or subsidiary information within your CDD or KYC structure? A lot of times, sometimes we know that it's difficult. If you get one layer within onshore, then what about subsidiaries and shareholders that are offshore, right? Then you have to start to buy information and data jurisdiction by jurisdiction, or sometimes you Google them and trying to piece this network together becomes a very laborious exercise. So having the access to this will again let you build a whole network diagram where now you'll be able to have a view whether are there any associated parties from your clients to the counterparty. Now, once we build the network diagram, then we start to go deeper into both parties, right? Then we want to look at then, is there any red flags to the rationale of transaction? Why is this important? Because we've seen some of this transaction with the counterparty where the business activity doesn't match up to the transaction activity, right? So there are cases where shell companies, typically they are registered and they just say that they're for either consulting or just business activities or business trading, right? Import, export. It doesn't say too much, right? So now you want to see is this something that is within a trend where it makes rational sense where the transaction now, when you're dealing, example, with an oil and gas company with a general trading company, right? So then does it make sense now in terms of its business transaction? Next step is then with enough information, you might want to look at then is the transactional value, then rationale for the books of business for both companies, right? So there might be series of small fraudulent transactions that adds up, but sometimes it comes to a big one is where they go for a killing. That's when you look at, is this then transaction rationale for the book of business? And many a times, if these are using shell companies that's being registered offshore, they may not even keep a copy of their financial statement with the registry. Now, then the question is that if you cannot find the information of this company with its financial statement and a website, then is the transactional value then rational for this business, books of business, where it has no information? Do you really want to deal with these kind of parties? Right? Then it adds another red flag. And interestingly, when you have the financial information of your clients, and when you have such red flags, there are then techniques and technology involved then to start doing a forensic account, a dissection of their accounts, right? Then you start to look at their financial statement. Is there any early indication where there are what you call window dressing of the numbers? There's not rationale in their books, right? Then you can start to create more reason to doubt as a building of evidence. Then, of course, with counterparties, a very obvious or rather telling sign is if when you can find that they have their status that is either dormant or inactive, right? And if these are inactive companies and you're dealing with them, then it creates even more reason to doubt, right? And that's when, as a risk, it adds up the aggregate risk score to the risk-based approach, right? Then we can start look at, now, do we really want to deal with this counterparty debt? And sometimes this company might be dissolved. We've seen sometimes the counterparties that in the trade transactions, they use past company names to create a transaction party. And then these are all dissolved companies. They are no longer in the registry, right? So these are all very telltale signs that something is wrong within these transactions. Another area, and this is very interesting, is when you have counterparties with names, they are very similar to each other. Now, granted in itself, having a shell company, creating a shell company is not illegal, right? And it has its purposes. But when you have shell companies created with similar names, especially similar names to another big holding company, right? And you have similar names that are all registered in high-risk hidden jurisdiction, right? Now, that also creates another question. Why are their names registered? They're so closely associated with each other. They're so similar in all these countries. So then it creates another question for you to raise. Is there another risk factor that you can put in as a reason to doubt and whether the counterparty, right, is in part of a scam for a fraud transaction now, right? So now we're looking at all the red flags that we are planted, right? So we look at the businesses, the transaction activities, the volume. And now we're looking at the network, and we look at whether the counterparty has any risk of being a shell company. Now, we talk about all these various red flags that we have shown, right, in the detection. Now, how do we actually pull this off in a more operational process, right? So, it's not just airy fairy talk. We need to be able to then pull this off, right? We need to pull this off in the investigation process, right? That's operationally viable. So, example, I've covered the names in this example so that we respect the privacy of the company. But I pull this example out is to show that there's no alleged wrongdoing here. It's just to show that there could be various red flags if there are parties dealing with each other, they are connected, right? And these are information that you can easily gather. So example of these two companies that will deal with each other, and we'll say party A on the left-hand side, this company, that's your client, right? And we're dealing with a counterparty. And in a scenario where you see these two parties are trying to trade, you will already have a full information, assuming that you have full information on your own clientele, which is a CDD process that you had done prior, right? But what about the counterparty, right? So if you have access to a data that you're able to then look at the counterparty, then it will give you, first of all, a first red flag, right? A reason to doubt. Now, this party is active, but now it's dormant, right? So it gives one reason to doubt. So let's dig deeper into this. In the operational process, we dig deeper and we realize there is a Mr. Wang Juan, who is the director for this company, and he's a Chinese national. Now, this company is registered in Great Britain, and he is the Chinese national that runs this company, right? He's the director of this company. Now, if we go deeper into looking at his profile, we can see that he has another company, right, that he runs as a director as well, right? Since you already have one, now you're looking at the other. Now then we go look deeper into Mr. Wang Juan, right? We must have all information on this counterparty. Let's look a little bit deeper. Now then we start to look at the other company, and we start to look at who are the directors that are behind the second company that he owns. Now, interestingly, then you can pull out various names, right? And then there is early indication of flags where you can give you early risk indicators. You have example, a Miss Hu Ting that's running the associated parties that they have with an early warning or flag, right? Which is a possible enforcement of being a PEP or sanctioned party. Now, this is going to get even more interesting because when in the first instance, we said that you have done your CDD and KYC process as your client, you realize that then Ms. Hu Ting runs the company that was in question, right? The original client. Now, if we put all this together, now all this operational process, now we put the whole entire network together now. Company A is dealing with company B. We check the company and we look at its counterparty. We look at what's the information. And we found the reason to doubt, right? It's a dormant company, registered is very inactive. And it has a shareholder, Mr. Wang Juan. And he runs another company, right? In his profile, he has the directorship of another company. That's company C, right? So we'll go deeper into our chain of investigation. We'll go deeper into it and we look at it. And then we discover that we have a director that's Ms. Hu, right? Within the same company that he runs. Now, when we done our CDD, we realized that Ms. Hu is actually executive director of your client. Now, we found that there are associated parties involved. So the question now is the original reason to doubt when we see that the counterparty is a dormant company. Now, then it gives you various red flag of association that you should look deeper into this, right? Now you have the red flag for detection. Then you can go deeper into investigation. Now, some of the investigation areas that you can look at, right, is if the counterparty, is it a shell company then, right, within its association? Now, what are then the company risk factor that you put into play to look at, is there any risk of money laundering or risk of such fraud, right, being a shell company? Now, we look at the geographical information, there are always high risk jurisdiction where you don't have enforcement of requirements of registering the shareholder or the beneficial owner in the registry. We look at the business sector. Now, if their business sector that's under pressure right now, then of course, you see what is being done. We look at all the ownership data and its financial information. And of course, sometimes what we do is we look at early indication of any adverse media or enforcement news that will give you early risk indication whether are there subsidiaries or are there associated parties that's being associated with this counterparty. Now, when you put all this together, what you will want to do then in your investigation process is to put all these various factors together to see whether you can benchmark what is the norm against what is then the bad elements, right? You won't want to do this for every counterparty and every client that you have, because it's you will need to run full analytics on this, right? And you want to only build this based on an investigation on a profile of a particular entity that you look at with all its red flags in detection. So what you want to look at then, who are then the outliers? And when you do a deeper forensic investigation, is then you look at back into the client that's dealing with this shell company. Then you want to look at then, is there any risk in this client's financial profile, right? Is it deviating widely from industry norm, right? And what we've seen is in the oil and gas industry, if there are, in general, the players are all suffering. Now, if you have suddenly a client that has a financial profile with a abundance of cash and abundance of assets that deviates widely from industry norm, then is there something deeper that you can look at, right? Are they beefed up by transactions within the banks or within the clients that are done with all these small little fraudulent ones, right? It's then worth to look deeper into them. So the key takeaway from all this is we have to be very vigilant to detect some of these subtle red flags, because these are very difficult to detect in transaction monitoring, right? So it's good to know your client's business and what activities they have, right? And to get all the adverse media around it to know that whether they are facing any form of pressure in the macro environment. But it's also even more important than to know who the other parties that the client is dealing with, right? In all these smaller transactions. So we've seen many cases where they're dealing with either associated parties or unknown shell companies that puts a pressure on this where it's early risk indication. And these are not something that's recent. We've seen it happen before in past crises. So this is important that we learn from our lessons from history today, right? I hope this is useful. We'll be glad to share even more information or knowledge for further discussion on trying to understand then which are the areas where we can help to look at parties involved and the counterparties within all trade transactions. Right? Thank you very much.